Options trading can seem complicated, but it's like getting a rain check for stocks. Imagine you think a company's stock will go up. With options, you hoping it goes up before your rain check expires. This rain check is called an option. Options trading is different from buying stocks directly. Instead of owning a piece of the company, you're buying the right to buy or sell that stock at a certain price by a certain date. Think of it like betting on which way the stock price will go, up or down, without actually owning the stock right away. Options trading can be exciting because it are risks involved. It's important to understand how options work before you jump in. Confident. Let's talk about the two main types of options, calls and puts. A call option is like having a winning lottery ticket. You buy a call option if you think the price of a stock will go up. If the stock price goes up, your call option becomes more valuable and you can sell it for a profit. Now, what if you believe a stock price is going to drop? That's where put options come in. A put option gives you the right to sell a stock at a certain price. Even if the market price goes down, if your prediction is right and the stock price falls, your put option becomes more valuable and you can sell it for a profit. Think of calls and puts as tools in your trading toolbox. Each one serves a different purpose depending on your market outlook. Remember, trading involves predicting the future and no one has a crystal ball. Let's say you're interested in a company called TechUp. You believe their new gadget will be a hit and their stock price will rise. You could buy TechUp stock directly, but options offer another way. You could buy a call option for TechUp. This option gives you the right, but not the obligation, to buy TechUp stock at a certain price, called the strike price, before a certain date, the expiration date. If TechUp's stock price goes up before your option expires, congratulations, your option is now worth more than what you paid for it. You can sell your option for a profit or even use it to buy the stock at the lower strike price. But what if TechUp's stock price goes down? Well, you don't have to exercise your option. Remember, it's a right, not an obligation. You'll only lose the premium you paid for the option. Options trading offers flexibility and leverage, meaning you can control a larger amount of stock with a smaller investment. Section 4. Potential risks and management. Options trading, while potentially profitable, comes with risks, just like any investment. It's crucial to understand and manage these risks before you start trading. One significant risk is the potential to lose your entire investment. Options contracts have an expiration date, and if the stock price doesn't move in your favor by then, your option could expire worthless and you'll lose the premium you paid. Another risk is the potential for unlimited losses with certain options strategies. While buying options limits your risk to the premium paid, selling options can expose you to potentially unlimited losses if the market moves against you. It's essential to have a solid understanding of options strategies and risk management techniques before engaging in such trades. To manage risks, start by educating yourself thoroughly. There are many resources available online and offline that can help you learn about options trading strategies, risk management, and more. Consider paper trading, where you can practice trading with virtual money before risking your capital. Section 5. Before you start trading, before you dive into options trading, take some time to prepare yourself. It's like learning to swim. You wouldn't jump into the deep end without knowing how to float. First, do your homework. The options market is vast and complex. So take the time to understand the basics of options contracts, trading strategies, and risk management. Next, consider your risk tolerance. Options trading can be more volatile than stock trading. How much are you willing to lose? Set realistic expectations. Don't expect to get rich quick with options trading. It takes time, patience, and discipline to become a successful trader. Finally, start small and gradually increase your investment as you gain experience and confidence. Remember, options trading is not a get-rich-quick scheme. It's a skill that takes time and effort to master.